Well, g'day there, everybody. Thanks a lot for joining me on this Wednesday afternoon market recap. We have had that of some telling signals collectively across the board in terms of the candlestick construction during today's session. However, before we move into the technical analysis, I just wanted to give you a little bit of an update as to the fundamental underpinning of this market. The Federal Reserve met today and they did raise the short-term cash rate another 25 basis points. The target rate now stands between 2 and 2.25% on the short-term cash rate, and it looked as though the raising or the rising of interest rates wasn't going to actually affect the markets. The markets somewhat shrugged that news off, and they continued to stabilize up until really the late section of today's session of trade. Then, of course, we started to see the waterfall sell-off begin, and that is what is accounting for these upper wicks that have developed across the board on the US financial markets. This is the chart of the NASDAQ in response largely to that fundamental announcement. You can see it is taking the formation of what we call a shooting star. I'm just going to put here SS, and this is technically speaking a very, very bearish signal. For the entirety of this sideways market move, and even since this breakout, this most recent breakout towards the late stage of August, we've been more or less sitting on our hands just waiting for market confirmation. And what I mean by market confirmation is that we want to see all three markets breaking out to new all-time highs, or we want to see all three markets. And when I say all three, I'm talking about the closely followed, being the NASDAQ, the Dow, and the S&P 500, either breaking down below their respective support areas before initiating a bunch of either bullish or bearish trades. It's what we call, somewhat to a degree, Dow theory confirmation. That is largely associated between the industrial average and the transportational average, but I like to personally use it also in conjunction with these three markets altogether as a whole, giving us textbook signals of either the trend continuing to the upside, which would make us all very happy, or if it does break down, letting us develop a bunch of short positions that would pay us off probably more so than what they would on the bullish upside. And it looks as though during or as at the close on Wednesday, that once again we have another relatively compelling signal that there is a high probability that these markets are just setting up that of a temporary holding pattern before breaking to the downside. I understand that this is somewhat of an outlier, or at least the perspective of this actually working out is a little bit of, I guess, on the, it's sort of out there. I understand that. But at the same time, a lot of these candlesticks are really suggesting that ultimately we are going to see a move in this direction, which has me a little bit concerned when it comes to our top 12 individual trade list. Not because we are positioned long, just because the majority of market participants at the moment are really only seeing the bullish upside potential of the market, and they're really just significantly discounting any potential of a market break. So we're going to have to keep our eyes on this. As we transition into Thursday's session of trade, we're going to have to see whether or not the late session dump today has got any legs to it as we move towards the back end of this week. But I cannot stress the importance of this rising bullish trend line on the NASDAQ. You can see it coming on up here. Again, we're closing just below that psychological round number on the market itself at 8,000. You can see we closed at roughly 7,990. And the story itself, it remains true if we continue with some of these other markets as well. You can see the S&P 500, we were down only 10 points today, but again, a significant upper wick. That upper wick was what established itself between really Friday and Monday. We spoke about this as at the close on Monday, and we're talking about, well, how we need to close this window, but at the same time, we had already closed this window over here, taking us back to Wednesday and Thursday last week. So today, we tick the box in terms of that criteria. And again, the candlestick itself, it's not really that of a shooting star candlestick, but it does have a very prominent upper wick and a very detailed, longer type of body to what we would consider that of a shooting star. It is a very bearish candlestick. And if you think about the sentiment pushing up intra-session to find the rejection at that gap close window, it doesn't really look all that good as we move into Thursday's session. Again, we are still relatively neutral on this market, but we are observant of the downside risk. And again, there does seem to me to be a lot of complacency out there when it comes to interpreting some of these market signals that we've been talking about and dwelling on for the past number of weeks, as the markets have largely been stuck in the mud, as they've been rather bifurcated in their non-confirmational signals. And that continues right through to the close today being Wednesday. Here's the Dow Jones Industrial Average down about 109 points. Another long type of Morobosu candlestick. Again, we do have a little wick and also a slight sort of upper wick as well. But for all intents and purposes, we have closed this gap, taking us back to Wednesday and Thursday last week, very similar to what I just spoke about on the S&P 500. And to me at the moment, this is looking very much so like potentially that of a false breakout to the upside, which again, we were waiting for in terms of market confirmation before jumping into any diamond positions. At the same time, and if I want to keep this analysis as neutral as possible, which is always my intention when we interpret market signals, I can also make the point at the moment that this is really looking like that of a bull flag continuation as well. And if I bring up these rising exponential moving averages, you can see that during this 3-day retracement, really for the majority of this week, Monday, Tuesday, and Wednesday, you can see these 3 black crow type of candlesticks developing. You can see that we've only really pulled on back down to the rising 10 exponential moving average. So again, these markets above all else right now, if there's anything you can take away from them, is that they're very bifurcated, they're confused. They're really not in any committed state, either to the upside or downside. And the battle continues between the buyers and sellers as to what the direction is going to be, probably for the rest of 2018. Once we get that definitive sort of turning point here, either to the upside with markets breaking out in synchronicity with one another, or if we see the NASDAQ, first of all, lead these markets below their respective support areas, and the rising bullish trend lines that we have been in going all the way back to April 2018, it's probably going to lay the platform, again, as I just said, for the last 3 calendar months of 2018. So if you find yourself not really being all that active in the markets at the moment, I completely understand why that is. For me, myself, I'm being very inactive in the markets and simply just waiting for a signal, a real signal, and then, of course, market uniformity before I start entering into a bunch of either bullish or bearish trades. And just to recap one more time, as at the close today after the Fed's decision to raise interest rates again another 25 basis points, the market reaction was somewhat subdued right up until the last hour or so of trade, where we really started to see significant selling pressure enter the markets. We're going to see once again whether or not this has any run to it, if it has any continuation into Thursday's session. Who knows? Maybe on Thursday, we just print another outside day white candlestick, very similar to what we printed on Monday, and then the markets continue. But whatever it is, wait until the markets confirm one another before actively chasing a bunch of trades, or at least entering into detailed trades based on your own technical analysis. If you have any questions whatsoever, please email me, success@pivotpoint-trading.com. Until next time, everybody, which will probably be tomorrow, have a good, enjoyable evening, and I'll recap the markets as at tomorrow. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.